Hello YouTube, this is Steven with On My Way to Fire, a channel about early retirement and all things investing. And in today's video, I want to talk about covered call funds and how I'm doing for the month of August. All right guys, so I've been in these for about a year, just about October of last year. Dipped my toe in, just buying a few shares at a time and allowing the dividends to reinvest every single week on most of these. So I've expanded my portfolio to include 10 of them, mainly focused in technology, a few with index related funds that are small cap and NASDAQ. And I've had a huge turnaround for this month. It's pretty impressive, guys. I was getting a little frustrated with these. The underlying stocks related and the index, weren't really holding up for June and July. We had a pretty decent sell-off in those, sectors. And what ended up happening was the dividends were a little lower than expected, but consistent. And we've had a massive turnaround. So let's get into the numbers here. So for the month of July, I was at 19,200 invested, and this month I'm at 20,250. So I was able to put just over $1,000 in new purchases to work. The main issue I'm running into here is I'm just about at the limit for the Roth IRA for the year 2026. You can only contribute $7,500, and I'm at 6,600 and change for the year. So that means I'm going to have to be reliant on dividend income from the Roth IRA, depositing as cash from other stocks to be able to buy some of these funds. And my original goal was to collect about 10 of these funds and get about 3,000 to 3,500 invested. And I don't think I'm going to be able to do it this year. And to be honest with you, I think I'm going to call the experiment short here at maybe 2,000 to 2,500 on some of the funds that I haven't hit goal on yet. So that'll bring my total probably somewhere around 24 to 25,000 when I'm done. But the turnaround is pretty good. I'm getting about $550 to $575 per month in dividend income, reinvesting with new share price purchases. So what that means is the dividends in general compound at a higher rate, but they do tend to fluctuate, depending on how the stock or index is doing. So let's get into some of the performance. Last month I was negative $550 to end the month, and this month I'm positive $838. So it's a huge turnaround. And a lot of it is related to the technology plays like NVIDIA and Palantir rallying a bit here. The NASDAQ fund has kind of stopped going down, and the small cap ETF is holding up pretty good too. So those are the ones that have really turned it around for me. Palantir at one point was $120 prior to the earnings announcement. And because they blew out the quarter, the related stock went up to $175 to $180. So what that means is the covered call fund related to Palantir that I have at one point was $16 and change, and is now at about $25 and holding pretty well. And I did get paid on it yesterday, but the dividend really wasn't that much higher than the prior week. So I'm waiting to see next week. That's generally where I see 2 weeks out where I see that the dividend has increased. So what's the bottom line? What's the score with all these? Well, they're going as expected in some respects, but the crypto funds are still, not really doing as well as I thought they would. But I'm going to be adding a little bit as I get new cash in the account and try to top those off. Really the biggest laggard is the Ethereum, but it's actually stabilizing a bit here. And, I'm getting paid close to $100 to $120 a month on that one. So, the Pro, it's adding while the cost basis is low, and it's bringing my average cost down. And ultimately, I may get to a point where I'm just barely break even or slightly below break even, but I've compounded all those dividends and I'll still have a gain relative to what I put in, as far as what I invested. So you really got to look at the big picture on these. And ideally, if you're doing it in a Roth IRA or retirement account, you want to do it like that because you're going to get taxed on all these distributions. Now, in some of these, especially like the Tesla fund, they do a lot of what's called return of capital. And so they just basically give you your principal back, but that also erodes the NAV as far as the net asset value. So it's a little bit of a bummer. And that particular one is down about 18% from what I put in. But I hadn't been buying any shares at all for the last 3 months. So I'm back to picking up shares this week, and we'll see what happens. It should even out a bit. But between all of them being up $838 versus being negative last month, that's a huge improvement. And I think as the year goes on, we're going to see some of these technology stocks continue to rally. They're going to have their ups and downs, and I'm going to have to use the opportunity to buy these dips with whatever cash I have. And so I'm gonna have to be mindful what's in the Roth IRA already that I have available to sell at a decent gain. And might even be a break even, might not even make any money on it. But I have it set up in such a way that I already have somewhere between $250 and $300 in dividends depositing as cash. And then I have about another 150 in dividends, but those tend to reinvest because they're monthly paying stocks. So depending on how those do, I could also sell some of those shares. But generally the way I like to do it is allow time to build the account with just massive increases in share prices, as I held some of these dividend stocks for well over 3 to 5 years, and in some cases 10 years. So I have different ways to pull money, even though I can't actually deposit new funds into the Roth IRA. So I kind of have this set up in such a way that I have more optionality as time goes on. But my main goal really is just to get the Roth funded for the year, and I'm doing way better than last year. So all things considered, it's going about as expected. And when you look at the actual performance, though, getting a return of around probably 3.5%, something like that, might even be a little bit higher, closer to 4. It's kind of weak for being in these for a year, but I got to take into account I invested a certain amount of money and I'm getting all this dividend income, and it's actually stabilizing here. So I can use that to my advantage later and start selling some more of these shares, because that's been my main goal. Buy a few shares more than I need, let those dividends reinvest, and when the funds hit a high, start selling. And so far between last video and this video, I only sold a handful of times. So I only got maybe 3 or 4 shares back to cash, and then I put it back into something else that was down. So I really haven't had that opportunity yet, but I think as time goes on, I'm going to see these dividends compound faster and faster and increase. But it's really up to the index, if it's related to it, like a small cap or NASDAQ fund, or a technology stock like Palantir or Nvidia. Bitcoin and crypto, I think it's going to take a while longer for these to come back. So that's why I'm saying I'm a little bit more comfortable starting to add a little bit more to those, because the dividends are stabilizing and the fund price stopped going down for the most part. But it's been a frustrating ride on some of these. I mean, I was down probably close to 50% on a couple of these funds. And, once the price does recover, that's when you see the massive explosive growth, because you've taken that time to invest during that dip. And, the biggest takeaway I'm finding is, to be quite honest, if you just bought the underlying stock or index that it's related to, you'd probably do better over time just building the position than you would on these covered call funds. I think they operate a little bit on a gimmick in terms of giving you back these high dividend rates, but you have to understand that it comes out of the stock price. So you need a consistent stock increase in order to pay these dividends. Otherwise, the stock price continues to drop. Even if it stays flat or slightly down, it's not really going to go anywhere. So with all that said, I appreciate you guys watching, and we'll see how we do in September and how I close the year in these funds. But ultimately, I'm going to keep it going through the end of the year, and really try to hit that goal of 24 to 25,000, a revised goal, I should say, at this point. All right, guys. Well, we'll see you in the next video. Take care.